now the most exciting part of the event today. So this is our panel discussion now. And we have a very, very exciting panel discussion on tailoring your value proposition to increase ultra HNI engagement. And we have amazing minds of the industry today with us in this panel. I would like to welcome the panelist of the day. So we have Mr. Richard, co-founder and CEO, True Beacon and Senior Advocate Zerodha. I welcome Mr. Richard. Okay, he's come. Okay. This panel would be moderated by Deepak sir, founder and director AFM India. The next panelist is Mr. Dhiraj Padiyath, head product and platform Yes Securities. We have Mr. Nitin Shanbhag, head investment product private wealth Motilal Oswal Group. K.S. Rao sir, EVP and head investor education and distribution development Aditya Birla Sun Life Mutual Fund. A very warm welcome to all the panelists, and we are really looking forward for this panel discussion and learn from this next 30 minutes of this panel discussion on a very, very interesting topic, tailoring your value proposition to increase ultra HNI engagement. And I think that is what we all look forward to, increase our ultra HNI segment when we are all wealth advisors. Our silver sponsors are IFA Now, supported by ICAI, FLAB, NextGen, and PMS Bazaar. Once again, thank you to all our sponsors. So a warm welcome to all the dignitaries and panelists, and we are good to begin the panel discussion today. Sir, over to you.
Thanks a lot, Dimple. So this is a panel which I am very passionate about, and it is about selling to HNI and ultra HNI clients. So I have been traveling across India, meeting lots of intermediaries, and one of the pain points of many of the intermediaries is I can't go to the higher level of the market. And because most of us believe that's where the money is, that's where the recognition is, if I can get good clients, if I can get ultra HNI clients. So in this panel, we'll be discussing what are the unique characteristics of those ultra HNI clients, how can you as distributors reach to those places, and what is required to reach there. And we have a very distinguished panelists here who have done that, and they know how to do it, right? But before I start this session on HNI and ultra HNI client, I'll ask one question to Mr. Rao. He is very passionate about building skills amongst the financial distributors. So my question to you is, sir, what are the skills and learnings which you see current financial advisors and distributors are lacking today, which is stopping them from growing as fast as they want to grow? Over to you, sir.
Thank you, Mr. Deepak. Thanks, Deepak, and indeed, good morning to all. Maybe in a while, good afternoon, of course. Thanks for this opportunity to be with the eminent panel here. Probably I may be beg to differ what Deepak said. People lack certain things. I'm sure today the HNI wealth as well as HNI investors both are on the upward galloping space, and most of our partners, associates, whether it's MFD, RIA, wealth managers, I think pretty good job. I mean, it's the last few years it's evolved, and this is one space you can't go wrong and you can't fool someone. HNI and ultra HNI, like they have already created wealth, and all that what you need to do is ensure their wealth is managed rightly. I mean, for when I go to MNI, I need to create a wealth. When I'm with HNI and ultra HNI, I need to protect his wealth or protect her wealth and ensure that my wealth is managed. And coming back on the skills, what you need to look at, probably the skills we need to constantly upgrade. The biggest skill is understanding the person who is. If you know your investor well, then half the job is done, because rest of the things, markets, we read the commentaries every day and we changes every day. But where the behavior of the investor, and each HNI is always different. It's every investor is very different, and they have a different needs, different investors, and different perspective. I keep telling personal finance is always personal, and what skills you need to manage one may be a different with the next person, as long as you are connecting to that person and building the trust. Means the skills what you need to look at on the one on the soft skills, and second in the hard skills. Soft skills is before even the soft skills, I can call it the spiritual skill. What you need to do is, I would like to serve my client better, and then I am here to manage his wealth, and he is the one who is giving the business to me, and it is my onus of responsibility to owe to him and ensure that he will not be missold at any given point of time, and his interest is my interest lies in his interest, my wealth lies in creating his wealth. That is the first skill one should have. And the second skill one need to have is your right communication at always. Communication of the consistency. It is not what I heard this morning in the TV commentary or what I read, I need to go and tell him, rather than I need to keep that emotions live. And we always call this as the investment advisory skills, IAS. And we also start with HNI. We have a investor, investment philosophy statement. Am I aligning these two or am I going away from it? Then your communication makes the things, and communication of the consistency. Here comes the self-discipline. And then the third one is hardcore, the product or the solutions, not the product. I look at, you are a solutions provider. Are your solutions on the right track? And you need to look at, I think, the Dimple was telling, it is always, you're learning. I mean, even the team is learning today. And if you are keeping constantly upskilling ourselves and connecting well, that is the most important. We do have that. When if you feel some of us, we are not having that enough confidence to reach to HNIs, probably HNI or MNI or I, there is an investor in him, and they are not different. And HNI, you need to protect their wealth, because one mistake what we do for them will have a bigger impact of loss to them, which we can't afford to lose that. Not afford to lose the client, not afford to lose his wealth. I think that's where we need to open.
Thank you, sir. That was great answer. There's a question for Mr. Richard. How do you define an ultra HNI?
Good morning, first of all, and thank you so much for inviting me to be part of this. It's great it's my first visit to the Bombay Stock Exchange, so I'm very excited. I'm a British national, but I'm now proudly an Indian entrepreneur. I live in Bangalore, and we have a hedge fund based in the south, covering around 400 or so ultra-high net worth individuals. And in a previous life, I was vice chairman of Standard Chartered Private Bank globally, covering that segment. I think many institutions have different metrics for defining an ultra-high net worth. It might be in global institutions might range that anywhere from 5 to 30 to 50 million US dollars. I think today, especially in India, in such a fast-growing and entrepreneurial economy, I don't actually think it makes a lot of sense to try and define an ultra-high net worth individual. Because down in Bangalore, many of you, I'm sure, have either visited or are based in Bangalore. But let's take that city. Let's take that tech hub of Asia. The wealth being created there, as it is being across India. A young 25-year-old today might be worth $1 million US. In a year's time, he'll be worth 30 million, 50 million, and so on. I think the characteristics, to answer your question, of an ultra-high net worth are more important. And those characteristics are they have very significant capacity as an individual or a family to create wealth, number one. Number two, they are increasingly sophisticated, and they recognize that building wealth is not the same as building a company. These are two parallel tracks that need to be done in tandem. And number three, they think globally. And number four, they recognize that they might be experts in their industry, but by collaboration, by strategic value, by coordinating and talking to their peer group, not just here in India, but globally, they will be far more successful. So I think, although there's no hard and fast definition, we're very fortunate to have double-digit billionaires on our platform, but we may have CEOs of big corporates based here in India. To us, they're all ultra-high net worth individuals because they've done extraordinary things in their life.
Great answer, sir. So how would you define, Nitin sir, an HNI or an ultra HNI?
I'll just take it forward from where Richard left, and from a global context, as he rightly mentioned, it's perhaps $1 million for an HNI and $25 million for an ultra HNI. But in India, we typically tend to classify it as, let's say, about 3 to 5 crores as the HNI, 25 crores as an ultra HNI. And if you want to get to the largest segment, which is the family office, then you're talking about close to 100 crores or more. But more than these segments, what I'd like to highlight is the fact that you can have various different kinds of ultra HNIs, right? You can have people who are CXOs. These are salaried employees who would probably come into money because they're going to monetize a significant portion of their ESOPs. There could be people who are in business. Even there, you could classify people into people who could come into business because of legacy business generations, or you could have, as Richard mentioned, someone who's done a great successful startup and he's come into the money. And the third is really your entrepreneurs, where who are driving businesses. Their cash flows may not be all that certain, but they may get into windfall kind of gains. So these are the various different categories really that I'd like to submit.
Sir, you would like to add something?
I think to continue what Nitin mentioned, and if you look at the entire database of wealth generated between individuals, I think 70 to 80% is largely entrepreneurs, and that's where the maximum amount of wealth lies in this country. So the opportunity for people who have made wealth is significantly only in the entrepreneurial league kind of thing. So.
Right. So we are fortunate that most of the crowd here is an entrepreneur, and they are building wealth for themselves and for their clients also. Right? So that's a great thing. Richard, I again come to you for the question. I have a client whose total investable surplus is 10 lakh rupees. Vis-a-vis, I have a client whose total investable surplus is 25 crore rupees. What changes?
I'll tell you from my personal experience,
Right.
and I'll work it in lakhs and crores. But I was very fortunate in the UK. I was working either in the government for the military or in the royal household and so on. My priority then was about my children's education. And I spent, I'll tell you a little anecdote. I spent about a year and a half in Dubai. Many of you will have been to Dubai. And I commuted every single day to work in Standard Chartered in DIFC. And I lived in a service department, and a taxi driver took me every single day. Typically, it would be an Indian, and it would be a he, and we get chatting in the car. And I'd say to him, where are you from in India? And because I've lived in India, I've been traveling here for decades, we'd have a chat. And let's say he's from Kerala or something. And I'd say, why are you here from Kerala? And he'd say, I've come to Dubai so I can make more money and send it home to Kerala to educate my children. And I would say to him, the only difference between us is I'm sitting in the back, you're sitting in the front. And I think no matter where you are, wealth creation first and foremost is about looking after your family, giving your children better opportunities than you had, and setting that up. So I think when you get past a certain wealth, it's about the addressable needs of your own family, then it's about wealth creation, and then you get past a certain point where wealth, frankly, is just a number. And maybe it's a measure for the analysts at Forbes or Hurun or wherever to judge you by. So I think the metrics of wealth might change, but actually the underlying reason that you're trying to create wealth is exactly the same. It's all about family. It's all about looking after the next generation. There are some incredible families here in India, business families who are, 5th, 6th, 7th generation. They're experts at it globally. But I think for all of us, we're just trying to set up and configure our wealth for our children, grandchildren, and so on.
So, Richard used a term where wealth becomes a number. So, this question is open to all the panelists. What changes when wealth becomes just a number for a financial advisor? As an advisor, what should I change so that I can cater to a client for whom wealth is just a number? Yeah.
So when you're catering to the HNI, ultra HNI segment, we need not be in an illusion that we are trying to create wealth for them, right? That's the first aspect. All of these people are in wealth, in an immense amount of wealth. So the way to approach really changes, and that's one of the reasons why in India I believe that we are yet to reach that point where we can successfully tap into a lot of these HNI and ultra HNI community, because we often approach them with the first standpoint of investments. I think this segment needs to be first targeted on their needs. For example, someone coming into a lot of wealth, whether it's business sale or a startup sale, whatever, the first requirement may be a tax structuring, right? Some advice on tax. The second aspect could be estate planning. right? Succession planning, because these are old businesses, entrepreneurs, they might be staying in the tier 2, tier 3 towns. They would have no idea of how financial markets actually work. So to that extent, a lot of education needs to be imparted. These are the few aspects, and then really comes investments. So I think to answer your question about whether I have 10 lakhs or 50 lakhs, there are very few investment solutions that I can really partake from. There would be mutual funds, there could be bonds, NCDs, perhaps some bit of insurance as well. But when you go into the larger scale, which is let's say 10 crores, 25 crores, so on and so forth, it becomes more capital preservation, right? It's not so much about wealth creation, but more capital preservation and then passing it on to the next generation. I think those are some of the few things that we as wealth managers really need to take care of when we are catering to that segment.
I think wealth advising is a bespoke offering, that's for sure. Now, managing wealth of large families or HNIs is a family decision. So to get inside that family, it's a matter of trust that gets built in this. And to answer your question, Deepak, you mentioned what is the number to managing a wealth. It's a matter of how much trust you have of the client. And once you have the trust, then you end up being part of every journey and every decision the family takes in the objectives of the family. So largely, then you move to a very approach which is oriented to what the objective, the goals, the long-term planning, maybe on the company side. So everything becomes a part of the journey for the client. So I think more important is to be a trusted advisor. And if you earn the trust, I think you have half the job done in terms of advising the client.
I'll start where Ms. Dhiraj was talking about the trust. That's the most fundamental part. When the number we look at, number is an external part and trust is an internal. And you ensure that you have the trust and you align to the values of the investor. You know, it's the HNI, that values you create for it. And as Nitin said, the intergenerational. It is for them, could be not the creating more wealth, it's also a preservation of the wealth, protecting that wealth, and then transfer of the wealth. And if you are confident of doing all these three, I'm sure you are on the job to manage HNI's wealth itself.
Anything you'd like to add to that?
No, I'd agree with all of that. I think also in an increasingly global, complex world, I think whether you're a private banker, whether you're a wealth manager, you have to take a very top-down approach to a family. And some of those things Nitin was mentioning about configuring the family, whether it's a charter, a constitution, whether it's tax planning, it's really trying to in the short term, be very agile and nimble about, obviously, the financial instruments that you're helping your client access, but in the very long term, configuring it so that it will last on a multi-generational basis.
Great. So what are some innovative ways you've seen advisors approaching the HNI and ultra HNI clients? So I hope many of you would have seen people going to HNI, and I think the biggest challenge is how to approach them. So you might have seen instances where people would have used some innovative ways, and if you can, if any one of you can share something.
I think I'll talk to, with reference to my company. I think I also handle the origination for the investment banking and merchant banking. So having access to large corporates and being advisory part to their fundraising gives us access to information where company at some point will have a equity event, and if that equity event is there, we as a company offer an enterprise-wide solution, right, from raising capital to managing the capital and also deploying that capital to an effective and efficient way. That is one part. I think currently what we see in the on the private wealth or the wealth management is the day an announcement happens in the newspaper, the promoter gets at least 100 calls for wealth managers wanting to meet him. There are some people who have access to that information, are there much ahead. But the key to this is, I think, to go through the newspapers and or to the sectors or to the market leaders and identify who are the leaders in those markets and start building relationships with these clients and then make inroads to this. I think that's the only way you will end up making inroads into this situation.
So I think one of the ways that we tend to do or go to some of these large HNI, ultra HNIs, even if there is a liquidity event, before you start asking him for investment portfolios, start asking, what can I do for your business, right? Because that is the foremost thing that is probably raging in his mind right now. Like I mentioned earlier, if it's a startup investor who's come into money, he's probably want to, invest that money into another startup. If it's a large CXO who's come into money, he's probably thinking philanthropy, or he's thinking about giving back to society. So for us, it's about what you want to do as a businessman, as an entrepreneur, so on and so forth. And then comes investments. But from a wealth management perspective, a lot of these relationships are based on references. And I think once you have an entry point into that segment, we need not feel shy about asking our clients. Once we display the trust that all our panelists spoke about, we should ideally ask for references. That's the first starting point behind acquiring relationships, and the rest of it obviously tends to follow.
So my last question in this series of questions is, what are the innovative products, or what products are required by these HNI and ultra HNI clients, which are different from a normal, what I know you were saying, a middle class person. So if anybody of you can throw light on that.
Well, we're a hedge fund primarily. We deal in hedged products that not only try to capture the extraordinary performance of the Indian equity markets, but more importantly, the long-term potential that we have here, but also recognizes that volatility is inherent in every single economy, and we want to dampen down and reduce that volatility. So we're trying to get the best of both worlds for our clients. That's, and we're not the only person in India, of course, producing alternative investment funds and manufacturing them. But we think actually that the types of products that really resonate are ones where our clients can see us deploying our sophisticated strategies. We also, within the portfolio management service, we also think there's greater scope for the incorporation of data, the utilization of publicly available data to try to model behaviors between either individual stocks or indices, and to use that data in a more intelligent way on behalf of our clients. And then I'd say our clients also want international exposure, and I think that's a very important point, particularly when they configure their families for the next couple of generations, where probably their children will be more global than they are, always hopefully with a nexus here in India. And then last but not least, I think, not necessarily product, but what our hundreds of clients are constantly asking us for, and where we spend a lot of time doing, is creating strategic value for them. Yes, they might live in Coimbatore and be in healthcare, but actually they're very interested in what's happening in fintech in Bangalore or Gurgaon, or they might want to have exposure to the steel industry. And so the connectivity between their peer group is really important. And I think that with a bit of EQ as a relationship manager or private banker, or indeed executives in any of our competitors, I think we can see what they need, sometimes before they understand what they need, and bring that to them as an option.
I think this is a very interesting point, Deepak. I think, and this is where the alpha lies in acquiring a client and managing a client. And to start with, I think most HNI or private clients would fall under a 60-40 allocation. So asset allocation would largely depend on 60% equity and 40% on fixed income. What we've currently devised is adding to add alpha to the portfolios, to add about 10% in terms of alternates. And those alternates, sorry, I missed your name. Richard mentioned, we invest in all AIFs, we invest in offshore funds, and we also invest and give clients the opportunity to invest in early stage startups. Because yes, at the bank, we have an ecosystem where at least 70% of the new age companies start banking with us. So we get access to those. So a lot of the investors do come to us and ask us what is the opportunities that are there to invest in early stage companies, and that becomes a differentiating factor. Right? And recently we've seen, I think, with the rupee depreciating, somebody wants to mark a safe haven for their wealth. They've started investing in the global markets, and we provide that platform, which is customized and a bespoke solution that is there. Yeah.
I'd just like to conclude by saying that it's important for us to understand the nitty-gritties of various different asset classes. For example, if you're looking at the unlisted space, there's the entire variety from pre-seed, seed stage, Series A, all the way to late-stage investing and then private equity. So this is as far as the private markets are concerned on the equity side. But when you look at fixed income, there is this new category which is emerging, which is called private credit, right? So this could all be with respect to structured finance. It could be, the way some of these market-linked debentures are structured these days, so on and so forth. But basically providing access to funding, which is either to not catered to by banks or NBFCs because of some kind of ALM mismatches. So I think it's important to understand the nature of the underlying asset class. We believe the hedge fund industry in India is fairly nascent, but the kind of work that Richard and team are putting through, and a lot of sophisticated managers through algo trading or high frequency trading, the kind of products that they can bring on board, I think these are some of the solutions that really cater to this community, because at the end of the day, what the Ultra HNI wants is access, right? He doesn't want the commonplace kind of products. So it's imperative on the wealth manager who's advising these Ultra HNIs to be in the know of all these complexities that come with the products.
I think, I agree what when Nitin was telling about, keep everything in a perspective. But one thing we should never forget when we are handling them is the whole purpose of that family, what is that they are intending to do. And any product I'm guiding, is it the product which is in passion where I'm talking, or product which is serving the purpose to him? Then we are done the job.
Great. So with this, we are open to questions. If any one of you has a question, just raise your hand. We'll send the mic to you. Anyone who wants to ask a question related to what we discussed? Yeah.
I can take the prerogative of first question.
Yeah.
I can ask this question to Mr. Richard. Yeah, Richard,
In that case, I'm going to do I'll ask you one in a second as well. Yeah.
And the question is you have a perspective of, global perspective of the HNIs and Ultra HNIs. Have you seen something very unique or differential characteristics when it comes to Indian HNI? And within Indian HNI, we have seen people like entrepreneurs, when Nitin was talking earlier, there are self-made billionaires. There are somebody is inherited billionaires. Have you seen their perspective of managing wealth or looking at wealth is very different?
It's a really good question, and I sometimes get asked this. I do think there is a slight difference between Indian ultra-high net worth individuals and those perhaps from the United States or Europe, and indeed other, China. I used to have a global role, so I used to get a bird's eye view of the characteristics. I think that the entrepreneurial spirit you have, family entrepreneurial spirit in India, is absolutely second to none. And I think that's amazing. And I think it's kind of imbibed in youngsters when they're here. And I think that sets them up, gives them probably a head start when we're thinking about next generation succession and so on. I think that Indian ultra-high net worth individuals are probably a little more fixated on their operating business, probably a bit more real estate heavy for sure, not to even mention about gold and other asset classes here that have obviously got a very strong tradition. But I'd say that the realization, I think what's changing here is the next gen going to some of the amazing universities here in India, or perhaps they're going overseas. They're getting a little more global. They're certainly getting more interested in exposure to the public markets, which probably their parents were not quite so interested in, and they didn't need to be interested in it, because their operating businesses over the last 20 years have done extraordinarily well. And so, frankly, if if you've got a chance to make 10, 12% a year on the stock markets, it's not probably as exciting as making 20, 25% in your operating company. I think that's changing very much here. And then I'd say, just to finish off on not necessarily answering your question, but just it strikes a chord. I think all of us have used the word trust here. And, all of your institutions, first and foremost, are very well trusted. And I think if you can have an institution that's well trusted, your relationship manager or your banker that's well trusted, and do a great job and combine tenacity to do a good job for your client, transparency, then I think that the segment, without doubt, is one of the most exciting business opportunities in India over the next 10 or 20 years. There's already been an explosion in wealth here. I think now it's up to us across the profession to keep up with those very exciting, predominantly young, and sometimes, to your point, first generation. In there, my business partner is in his 30s, and Nikhil Kamath, and he's been exceptionally successful with his brother. But he thinks in a different way to me as a guy in his mid-50s, and I think we need to recognize that.
Any other question, or we wrap this up? Yeah. Simple.
Yep, thank you. That was an interesting chat. So I just picked up a couple of points while Richard was speaking regarding, the Indians, the ultra high net worth individuals being heavy on the real estate side or maybe the gold. So apart from the new age entrepreneurs coming in, bringing in their first generation of wealth, there would be also a financialization of the old wealth, which is, focused on the real estate side. That would be a different journey altogether. Maybe they would also require some sort of an education. So how would that journey be treaded, and what kind of caution maybe the advisors, or what kind of approach the advisors would specifically need to take in that transition and, handling those kind of wealth or the investors? Yeah, that's what.
Let me take that. So I think the question was more on how do wealth managers, or what more should we do to kind of cater to that kind of a client who comes into significant portion of wealth because of real estate monetization or whatever else. You touch upon an important point, which is that we as an organization or we as a community need to invest far more time, energy, and money in upscaling the knowledge aspect of our relationship managers or wealth managers to cater to this segment. Because you need to be able to converse across topics, right? And as I mentioned earlier, when you're approaching this segment, you're thinking about their business rather than what you can offer them from your fraternity in terms of products, et cetera, et cetera. So the first thing that you may need to talk about is tax, right? So whether you have an in-house tax expert, or if you can collaborate with a third-party kind of tax expert, I think that would be the first thing that needs to be done. The second is in terms of estate planning or succession planning. How do you ring fence those assets? Because, and this is a global context, I'm sure Richard would agree, that a lot of wealth in the global markets is destroyed once it's created, because there is no framework in terms of managing it well or passing it on from generation to generation. So as wealth managers, relationship managers, we need to have that knowledge to speak about a variety of topics, take the point about what the client wants to do rather than enforcing your agenda, and then take it forward from there from an investment standpoint.
I think to continue through what Nitin mentioned, I think the approach has to be, once this entire discussion has happened post-monetization and you identify the investing objective and the goals, I think the approach has to be a completely portfolio-based approach, and what are the expectations on returns, the risk profile, and the kind of assets that the client wants to build. And once this gets hard-coded, I think the most important thing in any business is discipline, and sticking to that discipline of investing in those categories and the expectations that we build into it.
With this, we wrap up this discussion.
Sir, can we request panelists to throw some questions to the participants, and people who give the answer, they will give memento to the panelist. Is it possible? Can we do that? Can we have a few easy questions for our participants just to, bring some energy here back? One question each panelist. You can just throw one question to the participants. Let's see how attentive we are.
Well, rather than focusing on this discussion, how many people believe that in calendar year 2023, will equities do better or will fixed income do better?
Can we have raise hand? I request person who is giving mic to please pass on the mic. Can you raise hand?
Equities would be doing better, but being at the top, fixed income, some part we should be investing also to safeguard if the market reacts badly.
Okay, let me continue from where Nitin asked. Let me ask, is technology going to do better or Hindustan Lever going to do better?
Nitin, sir, we would like to give chance to some other participant.
Hello. Hindustan Lever is a consistent stock. So anyone investing today is going to make it. But technology, it can be a game changer. Some scripts we don't know. So a lot of research by the people here should go into it to find a right technology.
So that's why we live in a very complex world. Till about 6 months or 1 year ago, everybody was buying technology.
Okay, next question, please.
Okay, I was very fortunate to be over in New York. I was sitting in the New York Stock Exchange, and I went to the NASDAQ as well in about 3 weeks ago. I went with the Gift City, the Special Economic Zone team led by the chairman, and I've been there before. My question to you is, we've seen quite a lot of depreciation of the rupee, which means that when you're thinking about being a dollar investor, and you're sitting over in the United States and you can invest into, let's say, the top 10 markets in the world, you've got a lot of choice, but you have to be very mindful of that depreciation, not just of the rupee, but other currencies. So my question is, if you're a dollar investor and you're sitting in the US, and in May of last year, which happens to be when we started our international fund, but if you were thinking about investing into an index around the world and you had a choice of the US, the UK, Germany, France, Singapore, Hong Kong, Beijing, Seoul, and Mumbai, which one would have performed best?
Who would like to answer this?
Sir, definitely Mumbai.
Mumbai, ladies and gentlemen, and not just performed best, but it outperformed all of the other international markets by between 10 and 45% in dollar terms. That is remarkable. There's a lot of talk internationally about the rupee and international investors, well, maybe I'm going to lose 4 or 5%, but just put it back into dollars. And I think that's something that is very indicative of what's, the potential we have here in India, and something we shouldn't lose sight of.
Great.
This question is normally Deepak asks always. I will put this back to everyone. If there is a wealth planning, there are 3 things if we can look at. For when it comes to HNIs, wealth creation, or tax planning, or estate planning, which is important for the HNI?
Estate planning, I'll say. Estate planning, I'll say.
So now this is something very close to us also. Can we go ahead then? Yeah. Okay. So estate planning, a lot of people have said. Are we all aware what is estate planning? How many of you have heard of estate planning? Okay, so there are people who have not heard. How many of you are there who are already advising on estate planning? Can you raise hands? So very few. So a lot of scope is there. And American Academy is so proud to share with you that we have a very, very prestigious certification in estate planning that is called Chartered Trust and Estate Planner. Only certification in India that is based on succession planning. In panel also we heard many a time business succession planning or estate planning. and you can know more at our stall also from American Academy. We have many exhibitors here present around in this convention hall. You may visit for more details. So I think it's the time to end the panel. Before ending this, we would like to present the memento that we have for the panelists today for sharing wonderful insights on the topic tailoring your value proposition to increase ultra HNI engagement. Thank you to all the panelists for your time and sharing wonderful insights. Thank you so much. Thank you so much, sir, for being a part of the panel today. Thank you, Mr. Dhiraj, for being a part of the panel discussion today. Thank you so much, Nitin, sir, for being present here and be part of the panel. Thank you, Mr. Richard, for being a part of the panel discussion today and gracing our event. Thank you, Deepak, sir, for moderating this panel, and all our valued panelists from the bottom of our heart for such a brilliant and insightful discussion to turn this event into a true knowledge experience. Thank you so much to all the panelists.